Hello everyone, we are going to discuss about the previous year question of Corporate Accounting 2 from University of Madras in April 2013. Part C, the subject code is BYA4A. The question number is 23. This question is from Amalgamation, Absorption and External Reconstruction chapter. Let me read the question. The following are the balance sheets of H Limited and S Limited as on 31st/3/2011. In liability side, under the liabilities, share capital, shares of rupees 10 each, 2 lakh to H Limited, 4 lakh to S Limited, general reserve 80,000 to H Limited, 1,20,000 to S Limited, profit and loss account 20,000 to H Limited, no value to S Limited, creditors 60,000 to H Limited, 1 lakh to S Limited. The total liabilities are 3,60,000 to H Limited, 6,20,000 to S Limited. And the asset side, under the assets, fixed assets 2,40,000 to H Limited, 5 lakh to S Limited, debtors 40,000 to H Limited, 20,000 to S Limited, stock 60,000 to H Limited, 80,000 to S Limited, cash 20,000 to H Limited, 20,000 to S Limited. The total assets are 3,60,000 to H Limited, 6,20,000 to S Limited. And the adjustment, S Limited agreed to absorb H Limited as on the following terms. The first point is S Limited to give one share of rupees 10 each at an agreed value of rupees 30 per share for every 3 shares in H Limited. The shares of S Limited are quoted in the market at rupees 45 per share. The trade liabilities is to be taken over and give the required journal entries in the books of S Limited and the balance sheet. So based on this information, we are going to prepare the purchase consideration and journal entries of purchasing company and balance sheet under absorption method. Before going to prepare these accounts, we should know these notes information. The first one is it is absorption method and net payment method in fraction. It means if there is any fractional payment, how can we calculate? And the second, S Limited is a purchasing company or transferring company, and H Limited is a selling company or vendor company or transferor company. And for a shares portion, we have to take only agreed value per share, and for cash portion or fractional value, we have to take the market value per share. First, we are going to calculate the purchase consideration under the net payment method as well absorption in fractional payment. First, we are going to calculate the number of shares of H Limited equal to amount of shares of H Limited divided by price per shares of H Limited. The total amount of shares of H Limited is 2 lakh and the price per share of H Limited is 10. So 2 lakh divided by 10, we get 20,000 as the number of shares of S Limited. Then S Limited gives one share of rupees 10 each to get 3 shares from H Limited at an agreed value of rupees 30 per share. So there is a formula equal number of shares of H Limited divided by agreed number of shares receivable by S Limited from H Limited multiply with the agreed number of shares payable by S Limited to H Limited. So the number of shares of H Limited is 20,000 divided by 3 multiply with 1, we get 6,666.67. And agreed value of shares to be received from S Limited excluding fractions. So 0.67 is a fractional value of share that we have to settle in cash, and also it will be calculated separately. Equal to 6,666.67 minus 0.67, we get the face value of number of share is 6,666. Then purchase consideration in shares portion equal to number of shares receivable from S Limited multiply with agreed price per share equal to 6,666 multiply with rupees 30, we get a 1,99,980 as the purchase consideration in shares portion. Add fractional value to be settled by cash at market value. So when we are going to calculate any fractional value payment, we have to settle in cash, as well we have to take only the market value of share. Purchase consideration in cash portion equal to fractional value multiply with market value per share, then equal to 0.67 is a fractional payment, and rupees 45 is the market value per share. So equal to 0.67 multiply with rupees 45, we get 30 rupees as the purchase consideration in cash portion. So the total purchase consideration is 2,10,000 rupee. It means 1,99,980 plus 30. Then we are going to calculate the premium on value of shares. So premium on value of shares equal to purchase consideration in shares portion minus face value of shares of S Limited. Face value of shares of S Limited equal to number of shares receivable from S Limited in bracket excluding fractional multiply with actual price per share. It means number of shares receivable from S Limited multiply with the actual price per share. We do not take any fractional payment. So we have to take only the face value of the shares. So the number of face value of shares of S Limited is 6,666 multiply with the price per share is 10 rupee. So we get the amount of 66,666. That is called the face value of shares of S Limited. Then premium on value of shares equal to 1,99,980 minus 66,660. So we get 1,33,320 as the premium on value of shares of S Limited. Then we are going to prepare the journal entries of S Limited. S Limited is a purchasing company. The first journal entry, business purchases account data. It means a total purchase consideration value. The amount is rupees 2,10,000 rupee. We have to mention in the debit side. Two liquidators of H Limited account creditor 2,10,000 rupee. In bracket being purchase consideration or purchase price payable as per the agreement. And the journal entry 2, fixed assets of H Limited account data 2,40,000. Debtors of H Limited account debtor 40,000, stock of H Limited account debtor 60,000, cash of H Limited account debtor 20,000, two creditors of H Limited account creditor 60,000, two business purchases account creditor 2,10,000. It means the total purchase consideration value. Then to capital reserve. So the difference value is in credit side is 99,990. That is called a capital reserve portion. If there is any difference value in the debit side, that is called goodwill. But in this question, the difference value is in credit side. So that is why we have to consider as the capital reserve portion. So in bracket being assets and liabilities taken over by S Limited and found capital reserve. And the journal entry 3, liquidators of H Limited account data 2,10,000. It means total purchase consideration value. Two cash account creditor 30,000. It means purchase consideration portion in cash. Then two share capital account creditor 66,660. So it means purchase consideration in face value of shares portion. Two securities premium 1,33,320. It means purchase consideration in premium on issue of shares portion. In bracket the narration being purchase consideration or purchase price amount paid to H Limited. Then we are going to prepare the notes to accounts for preparing the balance sheet of purchasing company. So the note number 1 is share capital. Under the share capital, equity shares of H Limited. In bracket 4 lakh is the total amount of H Limited divided by 10. 10 is the price per share of H Limited. So equal to 40. So 40,000 is the number of shares of equity share capital of H Limited. So 40,000 multiply with 10, we get 4 lakh. that is the equity shares of H Limited, then plus equity shares of S Limited is 6,660. That is purchase consideration face value portion, which we have already calculated without fractional payment, and the price per share is rupees 10. So the equity shares of S Limited is 66,660. Then the total value is 4,66,660. That it means 4 lakh plus 66,660. That is note number 1 total. And the note number 2 is the reserve and surplus. Under the reserve and surplus, capital reserve 99,990, which we have already calculated. And the general reserve of S Limited is 1,20,000. Then securities premium 1,33,320. It means purchase consideration in premium on issue of shares. So the total reserve and surplus is 3,53,310. And note number 3 is trade payable. So under the trade payable, creditors of H Limited and S Limited is 1,60,000. It means 60,000 plus 1 lakh. And the note number 4 is tangible assets. Under the tangible assets, we have to mention the fixed assets of H Limited and S Limited. So the amount is 7,40,000. It means 2,40,000 plus 5 lakh. And the note number 5 is a trade receivable. So under the trade receivable, we have to mention the debtors of H Limited and S Limited. The amount is rupees 60,000. It means 40,000 plus 20,000. And note number 6 is a stock. So under the stock of H Limited and S Limited, the amount is rupees 1,40,000. It means 60,000 plus 80,000. And the note number 7 is cash and cash equivalent items. Under the cash and cash equivalent items, we have to mention cash of H Limited and S Limited. The amount is rupees 40,000. It means 20,000 plus 20,000. Then minus cash portion of purchase consideration. It means fractional payment made by cash. So the amount is rupees 30, which we have already calculated. It means equal to 0.67 multiply with 4,5. So we get the 30 as the cash portion of purchase consideration. So that amount will be deducted with the above amount. So 40,000 minus 30, we get 39,970. Then we are going to prepare the balance sheet of S Limited. In bracket after as absorption as on 31st/3/2011. So in particulars column, first we have to mention the equity and liabilities heading. Under the equity and liabilities, we have to mention shareholders funds. So under the shareholders funds, we have to mention share capital, and that is note number 1 heading. And the note number 1 total is 4,66,660. And reserve and surplus, that is note number 2 heading. Note number 2 total is 3,53,310. And the second, current liabilities. Under the current liabilities, we have to mention trade payable, that is note number 3 heading. Note number 3 total is 1,60,000. So the total equity and liabilities are 9,79,970. It means 4,66,660 plus 3,53,310 plus 1,60,000. And Roman letter 2 is assets. Under the assets, we have to mention non-current assets. Under the non-current assets, we have to mention tangible assets, that is note number 4 heading. Note number 4 total is 7,40,000. Then we have to mention the current assets. Under the current assets, we have to mention trade receivable, that is note number 5th heading. Note number 5 total is 60,000. And we have to mention the stock, that is note number 6th heading. Note number 6th total is 1,40,000. And we have to mention cash and cash equivalent item, that is note number 7th heading. Note number 7th total is 39,970. So we get the total assets of 9,79,970. It means 7,40,000 plus 60,000 plus 1,40,000 plus 39,970. That's all.